Hi everyone, this is Shadab with the weekly analysis. As usual, we're going to start with the euro against the American dollar on the daily time frame. First of all, let me zoom in a little so we can see everything clearly. Actually, what we expected last week partly happened, but as a matter of fact, we'll need to find a strong pace where we can enter the market. So I would prefer to wait for the pair to reach the level of 1.1217. This is a strong support area. Or maybe we can wait for the pair to reach the downtrend line. This is where we can go short to follow the major trend, which is the downtrend that we can see here. So we have two scenarios. As a matter of fact, the pair goes up to reach the downtrend line, then shows up some bearish evidence, then we can go short. The second one is where we can go long, or maybe actually this is where we can find a strong support area where we can go long, or where the price can actually go up, because as a matter of fact, since this is a strong support area, there will be many buyers who will be entering the market at this point, so the price as a result will go up to reach the downtrend line. Again, this is where we can go short to follow the major trend as we mentioned. So this is how it will work this week. So waiting for the pair to reach the downtrend line would be the very interesting entry point where we can enter the market. The pair goes up to reach the downtrend line, shows up some bearish evidence, then we can go short, targeting the level of 1.13, 1.1217 during this week. Let's move to the GBP USD. On the daily time frame, actually it did break the level of 76.8, which is 1.2550, but then the price goes up again, and this means that this is a false breakout, so we can't actually depend on it anymore. So what we can do this week is to wait for the pair to reach a strong area. I would say that the strong area would be the level of 1.27. So I think we need to find some bearish evidence right here so we can go short, as a matter of fact. So we need a bearish candle to show up here, then we can go short, as a matter of fact. The targets will be updated on the daily reports on the website of the company. Now let's move to the gold on the 4 hours time frame. Just like what we expected last week, this is what happened. The pair went up, it did reach the level of 12.50, then went down to just reach the uptrend line, the short-term uptrend line that we expected. Then it went up again. Now it is traded below the level of 12.50. What we would expect for this week is that two scenarios. The first one, the price continues going up to reach 12.50, then it shows up some bearish evidence, then it goes down again to reach the level of 12.35, or maybe around the short-term uptrend line. The second scenario is that the price continues going up, continues going higher and higher, and this means the price might break through the level of 12.50. Okay, and this simply means that the price might continue going up to reach at least 12.60. So what we can do is to wait for one of those scenarios, okay, to trigger, and as a result we can enter the market. Now let's move to the Australian dollar against the American dollar on the daily time frame as well. Okay, these are the lines that we did draw last week, just like this, those two ones, the downward line, the down line, and the up line, like this. So what we can do this week is to wait for the pair to reach the level of 0.7030. This is where we can look for some bullish evidence, and then we can enter the market. We can go long, as a matter of fact, in case some bullish evidence shows up above the level of 0.7030. So the pair continues going down like this, goes to the level of 0.7030 and then shows up some bullish evidence, then we can go long. And at the same time, you're gonna find that the stochastic is actually it has left the oversold area. Now it is traded above the level of 20, so this simply means that the price might go down again, since it is very close to the level of 20. So it might be something like this, might go like this. The price goes down and then the stochastic goes down, those two lines, the green one and the pointed red one. So the price goes down below 20 again, and then it goes up. As a result, the price goes up at the same time. By then the price would be traded right above the level of 0.7030. Shows up some bullish evidence that stochastic is leaving the level of 20, then it goes up and goes up and it hits our target. So it goes this way, the price goes down to reach the level of 0.7030, shows up some bullish evidence, then we can go long target in the level of 0.73. This is our very first target. Finally, with the JPY on the daily time frame, okay, now the pair went up like this. The last week the pair went up to retest the broken area, then this candle showed up. Let me zoom in like this so you can see everything clearly. A candle like this showed up, then a candle like this big red one showed up. So this actually is called bearish engulfing. So this is a bearish signal. It signals, okay, just let me zoom, okay, zoom out like this. This simply means the price might continue going down. Our very first target is this low here, 141.25. If it is broken, the price might continue going down to reach 140.21. So this is how it's gonna work. I hope this helps, and thank you for watching the video. Have a wonderful week.